Trading education, 2 words for you today. We all need to understand our businesses before we operate a business, just as we need to understand trading before we actually do trading. So I'm going to talk a little bit about that today, about the importance of risk. Okay, my name is Richard Lee. I manage the Stockradar.com.au website for you. Where Stockradar runs a quant strategy based on high probability signals to create a trading edge. That's what we do. The Stockradar website offers a real-time education toolkit based on my 40 years of trading experience that culminated with the development of the Stockradar Trading Centre. This is our main trading page that monitors and updates all our covered stocks on a weekly basis and rates all stocks on a scale of +10 to -10 using our trend intensity rating system. Feel free to take a trial and check it all out. Okay, now, firstly what we're going to go into today, we just go through the overseas markets, look at the ASX 200, look at some stocks picks, and I'll go through trading tactics for you. Trading tactics, what is trading rule number 1? I'm going to talk about a bit about that later on, just very briefly. Okay, but firstly we're going to get to the markets. Not a lot of change. The Dow's still strong, holding up well. Every now and then there's a bout of selling, but the market just seems to continue higher. And we don't see any really need to change any view on that at the moment. There's no evidence there to tell us that. Okay, the Nasdaq is similar. It's still going higher, breaking up higher. Good volume here. Momentum's good, so the techs are okay. We are seeing, it's quite tricky seeing this rotation for the mining stocks up one day and down the next day, the tech stocks down one day, up the next day. It's all a bit of rotation, but the trend is basically towards techs, and the mining stocks have had a little bit of a breather, but there's a few interesting ones that are breaking up strongly, and we'll have a look at those later on. Okay, back to commodities again. Copper, still range trading, no resolution there. It just sits in that trading range, waiting. Plenty of activity there, plenty of people who have an opinion, but it's going sideways, so it is in relative balance at the moment. We go to Brent Crude. This one's holding up well, although we've had a huge run over the last year or so. We're seeing some heavy selling here. We see some heavy buying. We're seeing some heavy selling. The commodity is really not going anywhere at the moment. We've had a good rally this week, so it's weathering the storm pretty well. And we saw OPEC sort of try to increase their output, whatever it is this week, and try and dampen the prices, but that's going to have very little effect. Tighten their supplies. It's going to have very little effect, and we can see the crude price again is pretty strong. So again, it's healthy. Energy stocks are doing okay. Gold is a bit of a no-no. You're getting plenty of mixed signals on gold. One day it's up, next day it's down. We saw a good rally a week or two ago. It's been dumped on the head again. We saw some good volume. Some sellers have appeared. It is mixed signals, which in the end equals uncertainty, and in the end we're still going down. So with some support here. So gold we'll just stay away from at the moment. Moving straight onto ASX 200, which is again interestingly going up quite well. It's been quite strong, holding that sort of range that it's been in between sort of 7,600 and 7,100, just trading in this range. What I do note here is, though, if we have a quick look at the volume here, which I've got, I've got here somewhere. No, this one here. So I just wanted to show you what the volume was looking like, because I don't have it on my system. But we can see here that the recent correction that took us down from August through to September, we saw some pretty heavy volume here. That's the first time I've seen that for a while. So interestingly enough, we see these bouts of selling, but the buyers keep jumping on them. So at this stage, I'm still holding fast. There's no other evidence at this stage regarding price weakness on the index. So it looks okay to me. So we'll just... it's just a warning sign. Again, we always look for this evidence, trying to build evidence. If other things start to appear, then we make a bit of a case. But at the moment, the trend is holding and it's going up. So the ASX 200 is still fine. And as I say, we're seeing a bit of rotation there. And we're going to look at the banks a bit later on, because there's a little bit of trouble on the horizon there, I think. Okay, so we just go back to... so that's the ASX 200 for you. The portfolio, the Stockradar stock pick count was down 1 to 73 of 188 covered, of which there are 167 stocks and 21 ETFs I'm covering. The 5-stock portfolio is full with 5. The 10-stock portfolio has currently got 9 stocks in it. And the conservative portfolio, which has been quite strong, has got 9 out of 20. It's not too bad at the moment. And our sectors at the top are internet. All our stocks are in there at the moment. DHG, Megaport, Car Sales, Seek. They're all going okay there at the moment. Okay, building our portfolio in March. It's at the one that we started in March. It's sitting at 15%, so it's come off a little bit from the last week. This is our controlled high conviction. The stocks we have in there are Computer Share, Car Sales, Westpac, Intertech, Pivot and Orica. And we can see here, if you can see this here, the Computer Share has done very well. It's up 31%. Westpac's about 12%, and we've got even Intertech Pivot's up about 7% just from a month or so ago, and we've got a couple of very minor losses there. Car Sales has done very little, and Orica, well, it had a little bit of bump up, but it came back a bit. We'll just hold on fast there. So that's that portfolio. That's the one we run for you, so you can have a good look at it. But it's performing okay at the moment, and there's no change in there. Okay, so now let's get to some stocks. Okay, our first review stock is JB Hi-Fi, which is the one we look at every week. Again, we're seeing a little bit of trouble up here again. We've had a rally, we bounced into there, we saw some volume, but already it's come back a bit. Not a lot of volume, but this is pretty well neutral. The trend intensity rating is -4, just below neutral, so the buyers are certainly challenging the sellers, but the sellers, once again, seem to be holding court at this area up here, around the $50 area. So we will move on from that. JB Hi-Fi is still struggling up there. Okay, new highs. Well, James Hardie's been a great stock. Now, we looked at this a while ago. I know it's just been steady, but I just wanted to show you this stock. When we saw the break up here in last September it was, at $32, we look at that price as probably expensive because it's always been below there. But then it really doesn't matter because the stock is now climbing towards 100% gain. It's up around 55, 56 at the moment. $60 gives us doubles our money. So that's pretty good for that. So we don't really worry too much about the price levels. It's what the actual price action does that tells us. And a new high is always something we go for. We've got new high, we've got volume here, we've got good momentum that kicked it higher. And this has been pretty well steady throughout. Fluctuated a bit. I don't read too much into those fluctuations. I look for the crossing below zero to give me a real signal. Now, the trend has been very, very steady here. Good corrections and good buying has pushed this stock up well. So trend intensity rating is 8 for James Hardie. That's a new high stock. Okay, now you saw on the front page today Commonwealth Bank. Okay, so what are we doing with Commonwealth Bank? So it was a beautiful trend reversal like all the banks did late last year. They all reversed up beautifully and they've all had lovely little trends. Okay, now we've seen the things change a little bit by little bit. But first I want to look at Commonwealth Bank because this came off rather abruptly and we know the net interest margins and all these stories which are contracting, which is a bit of a worry, and the huge reliance on the mortgage market for CBA. So it's come off. So in this situation here, you know, what the outcome's going to be, what CBA is going to be in 2 months, 6 months, I don't know. But I'm a momentum trader and I manage my risk. In this situation here, we've had a trend reversal down here, we've had a beautiful trend up here, but now it's time to say goodbye as this big jump down takes us below our stop last week. So we're exited out of that stock this week and we go neutral. We lock in our profit and stand neutral. Okay, this is what we do. We can always buy a new high if it happens again, but the risk is the downside at the moment. And we can see the sellers have come in here and momentum's gone right out of this at the moment. It's still above zero, so that's okay. But it's certainly slowing down this pace of the rally. And there's been a little bit of a review of CBA. So we're out of that stock now. We've taken our profit and we will move on. Okay, let's just go through some of the other banks. Now, we've seen them one by one. They have fallen out. Okay, first let's go to the regionals. Bendigo Bank. Okay, now it had we said a beautiful trend reversal down here. It broke up in November this one. November this one. We had a bit of volume here. We had momentum gaining there. It had a good rally. It then struggled up here a little bit and we saw our stop go off. This is going back in August. Okay, so this was out in August. We took our profit, stood aside. Okay, three things can happen. Can go up, sideways or down. This one is going down still. Okay, right. The next bank we look at is Bank of Queensland. Same situation, we had a nice little rally. These just tease a long-term trend from the highs. Okay, so still in a long-term, well, it's sort of a long-term downtrend basically for Bank of Queensland, and the other banks are a bit similar. However, this one here, we saw the stop go off back in October, and it's come down quite a bit since the stop went off. So that's now trend intensity rating of -6, and it's not looking that good. The trend is down, the volume's up, and momentum's back down to zero. So it's not looking that flash. So you get the picture. This has been a stalwart for the market to the banks. And it's interesting that the market started to go sideways and the banks have started to come off. So let's look at the next bank. Westpac is the next bank. This is the first big major to come off, okay? We saw this had a nice rally, good rally from $18, got up to 26, came back, couldn't make a new high, okay? Failed to make a new high, that's a warning shot across the bow, and then we finally take this low out here, which is where our stop was, and we've seen this done decline as well. We've seen some selling come in here, momentum's gone below zero, so Westpac is out. So this run is not looking so good anymore. And then we've got two more banks. These ones I still hold. Okay, ANZ is still holding. Now we can see this has gone sideways since about March actually. So we really haven't got a lot of gains. We picked up a bit of yield maybe, but we had a good rally from here. It's gone sideways and there's a bit of selling starting to appear. Nothing really consistently evident. The trend intensity rating is still 7, but it's certainly having trouble up around this $30 level, $28, $30 level. So we will watch ANZ now because the other banks have now started to fall out. And NAB, which was the pariah for a long time, has had a great rally again from about 19 bucks, got up to 30 bucks, and it's still going up. And we still have our stop in place here. Trend intensity rating is 8. Volume is fine. Momentum is okay. It's steady above zero. So this trend, believe it or not, is okay. But you can see the banks one by one, they have tapered off and they're coming down. So that's putting a bit of pressure on the index. ANZ and NAB are still holding up, but they may well come in yet. We don't know. It hasn't broken yet, so we don't anticipate. So that's the banks for you. A little bit of a changing picture there for us at the moment. Okay, and a couple more stocks I want to go through. I'll go through a few leaders today. So I just wanted to, because there's plenty of money to be made in these leaders. They're all good. They're all safe stocks. Trend intensity rating for Telstra is wrong because it's out. I think it's actually -4. Oh no, actually pretty neutral at the moment because we tried to make a new high yesterday. Firstly, we had our rally from the low $3, below $3. It rallied up to $4, which is the old resistance level here. And then it came down, we failed to make a high, and then it got stopped out 1 week. We got stopped out, unfortunately, but still, we lock in our profit and we wait and see. Now, this didn't quite get a violation last week, although it closed above $4. We need a certain amount to break the point, to give the signal. Didn't quite do it. It may do it this week. If it finishes above 406, 407, we may get a re-entry this week, which is how the Stockradar strategy works. When risk is on, we take our profit, stand neutral, the stop goes off, and we just wait and see what happens. In some cases, the banks have gone down. In this case, Telstra has gone up. Now, if we look at Telstra going from a longer term, as we know, it's a very good trending stock, but this area here, $4 is quite a significant level. If it does break through here, then it's got some, certainly got some power to get up towards its $5 level quite easily. So this is a significant resistance level we are at. So we're going to watch this level fairly closely. We dropped out a couple of weeks ago, but it may well come straight back in because it could make a new high. Okay, so that's Telstra. Don't worry about that trend intensity rating. That's not right. It's neutral at the moment. Okay, so the next one I want to look at is Woodside, which is a bit of a topical one. This one, it's found it very hard to benefit from the increase in crude price. It's now gone gas, and Pluto, Scarborough. So it's interesting what's happening. This is flying in the face of the Glasgow thing, this fossil fuel thing, which it's a topic of discussion, but where the money's made is they're going to sell a lot of gas over the next 10 years, no matter what. And whether the market likes that or not, it's difficult to say because we've seen this big trend reversal pattern developing here over the last 2 years. It's got up to a high of about $29, $26 here, $26.70 I think is the high there. And we've got these high lows here, but we've also seen this good rally here, and then we saw the sellers jump all over this, and that's a bit of a worry. It's a bit like BHP, which has had some huge selling on it, but Woodside, that's big selling, that's going to be trouble. So what I'm looking at here is this level here is key. The $25, $26 level, if it can get through there, it is providing resistance now, it was providing support, and if you remember, one day, a long time ago, I think Woodside was actually a $70 stock, which you can see there. But you can see the support all the way through here, which is now providing resistance and a good point for us to reference. So if we're going to get a trend reversal, that's the likely point we're going to look at. We have got volume here. This is neutral momentum, and we're sort of flying around the average, which has gone a bit flat because we've been jumping around for the last couple of years. So Woodside is sort of interesting, but there's a real battle going on here. So we just have to watch this one. I think if it can eventually get through this trigger level up around 26.70, it may unearth a rally up towards $40, but we just have to wait and see. There's a trend reversal structure there. We just wait and see what happens. There's a heated battle going on here, so between the buyers and sellers. So we'll just let that play out and wait to see who can eventually come out on top. Okay, so it's all a bit of fun, isn't it? So CSL, well, we haven't looked at CSL for a long time. Why? Because it's actually been going down for about 2 years. Okay, so let's just now have a look at it. We actually, CSL is actually one of our stock picks, which we did enter recently. We've had some lower highs here. We had a high up here, we had a lower high, so we had a bit of a downtrend going on here since the start of 2020, right through till now. Now, all of a sudden, we've got a change here where we've now broken this sequence of lower highs, and as we had a high here, we've got a trend reversal that has occurred here. It doesn't really look like it, and I say there, trend intensity is a physical measure, not an eye measure. The eye can sometimes not see what it wants to see or not see what it wants to see. Trend intensity is a physical measure, and the trend intensity rating for CSL is currently 10, which may surprise you, but if we look at this here, we have an official break above here, a trend reversal break. We have it above the moving average, which is now rising. We have volume, which is pretty steady and not too bad. Demand is building, not a game change as it said there, but it is building, and momentum is now starting to kick up. So we've now actually got a trend intensity rating of 10, so all that really stands in the way of a good rally for CSL is this 340 level. Okay, so it's an interesting picture. It's been slow to move, but it's now starting to get these high lows, and starting to make some high highs. A bit tentative maybe, but not looking too bad. Okay, so that's CSL. Okay, let's finish on an interesting note. We've got a small stock here, which I don't cover, but it's one of the miners, and we've actually seen some of these miners have just gone through the roof, these small miners recently, as people jump all over them. It's a dangerous world of small miners. They can come back just as quickly. I often suggest people cut their exposure in half and widen their stop by double the size of their stop, because sometimes you can just stop out with these ones tricky. So it's a really hard one to balance the risk reward in these trades. But if you want to play, Antibur Minerals is trend intensity rating of 10. It had a breakthrough last week. It's been in a trading range since 2017, 4 or 5 years. We had a high low here. We're now getting this two highs here taken out and this high taken out. This is starting to look okay. Trend intensity rating of 10. The volume is starting to pick up and momentum is also starting to jump on board. So always risk manage these trades, but there's a little one for you if you're keen to play in this mineral space. Okay, and finally, just to finish with this one, this is a one that I've recently started covering, Premier Investments, in the last this year, I think. I started covering this in this year, but it just simply broke to new highs just after we covered it, and it broke to new highs, so we buy the new high and just trail it up with a stop. You'll probably find a lot of these trends, if you look at the James Hardie trend, look at this trend, often the trend is basically follows up, this trend line is basically across your lows, or line of best fit if you like, and the average often runs alongside that, and they give a fairly good idea of where the support's going to be. So for Premier Investments, trend intensity rating is +8. It's not shooting the lights out, but it's edging higher. It just keeps plodding higher, and that's great. And we can see here the demand's been pretty good, the momentum's strong, so it looks okay. So that's Premier Investments. So that's the stocks I want to cover for you today. I hope there's something in there for you. There's plenty more stocks to go and see on Stockradar, plenty more stock picks for you to look at there if you want to take a look. Okay, so that's what I've got for the stocks today. Now I just want to go briefly. Trading tactics is fairly brief today. It's really just something that's really, as you know, is very dear to my heart and very important to me as a trader, because what is trading rule number 1 is manage your risk, okay? So trading rule number 1, understand and manage your risk all the time, because it only takes one bad hit. You say, I'm going to hold on to BHP, or I'm going to hold on to Fortescue, I'm going to hold on to whatever, and you watch them go right down the gurgler. And maybe they will come back, but they can take some time. That's not my game. I'm not a theme trader or anything like that. I'm a momentum trader. Once that momentum goes out, I get out, because we don't know what's going to happen next. So I'm always managing my risk and keeping my risk very small. So my risk strategy is totally clear, totally concise, and totally simple. Okay, we always want to try and bundle everything into the pie and try and make decisions on buying and selling. It doesn't work that way. You've got to choose a strategy and work with it. So I have a clear objective, which is to risk manage momentum trades. Okay, risk manage momentum trades. That is my focus, total focus. Clear strategy, entry signals. There are two of them: trend reversal from a low, a new high from a high. Okay, my exit signal is a stop loss, which I limit any loss to X amount. I don't lose any more, that's it. Or stop profit, like CBA, like James Hardie, whatever it might be. My stop is raising up and locking in more profit every time the stock goes up. And that's really important, okay? So the premise that I base myself on, and it's that simple, there are 4 outcomes to a trade. You can have big, good wins. You can have little wins, struggling wins. You can have little losses, or you can have big losses. Now, if you have a risk management strategy that says, I get out when I'm losing X amount of dollars, then you are limiting your risk and you won't ever have any big losses. Don't try and think you know better. Don't try and think, well, here's something that says I should hold, because that's only because you want to do that. So it's really important that you just do that. Whatever your risk strategy is, you must follow it. And mine is not to take big losses or drawdowns ever. And that's how I survive. So this is what I'm going to do with CBA. As I said there, manage your risk and keep those profits. Doesn't matter what stock it is, doesn't matter what fundamentals there are. I only have one strategy that I use, which is my technical strategy, which is to trade momentum and manage risk, and that's what I do. Okay, so let's get so don't forget to check out my blog. It's free and it's fun. There's a couple of new articles up there in the last week or two. The newsletter is out next week. Okay, industrial material stocks are the focus. We show you. I'm also going to show you all our open positions on Stockradar. So I want to show you. I do this every now and then to show you the profile of how it works. So that's an interesting thing for you to have a look at next week. You can take a trial, you can come on board, get the newsletter at the end of the month, and see what is happening there. So the open positions is a really important part of managing what I do. In the Radars rant, I talk about giving yourself a break, take a step back and see what's real. Okay, sometimes we get so close we can't see what's real, so sometimes we have to take back, take a deep breath and say, oh, there it is. Okay, so that's what we've got to try and do. Okay, there's lots more education tips for you, and remember, managing your risk is vital. Okay, good luck for your trading week. Thanks for listening. I hope you all learned something today, and I'll see you all next week. Thanks a lot.